Sarah Chisholm here with your mid-year market report. I know this has been a hot topic lately, so let's jump right in. We're always going to start with the number of homes sold, and this chart is comparing this year, the first half of 2022, to the first half of prior years. So you can see we have homes sold, the total dollar volume, that's the aggregate of all of the sale prices, and then average days on market, of course, and a breakdown by price. Now, looking at this year over last, we see just a 2% increase in the number of homes sold. I want to break that down quarterly to kind of give you some context. Going all the way back to the beginning of 2019, this was very common where the beginning of the year is slower with less home sales and works up quite a bit throughout the year, and then it dips again at the beginning of the year and increases throughout the year. But what happened is obviously Q2 here was the shutdown quarter, so that was a bit stifled as compared to what it otherwise would have been. And then, of course, it was certainly made up for and then some in the second half of 2020. And that has just been slowly carrying through, kind of removing the cyclical nature of the market and keeping us, at a very consistent pace per quarter as far as the number of home sales. And what we're seeing in Taos is if there's the inventory available, it's moving. Now, let's look back at this same chart and take a look at the dollar volume and prices. So of the homes that sold in the first half of this year, the total dollar volume is up 23% compared to last year, meaning that there's still upward pressure on prices. And that's also reflected at the bottom where we see the average and median price both up quite a bit. Now, let's do the same thing and just break the median sale price down by quarter so you can really see how and when those values have changed. So starting in 2019, the market was very strong. Not sure what this dip was in Q4 of 19, kind of an anomaly there, but we were on a very steady incline, lots of upward pressure on prices as we moved through the first couple years of the pandemic. But in all reality, we're seeing that level off. It's not dipping, but it's still on an incline, but a very much more gentle incline than what we've been seeing over the last couple of years. Now, lastly, I want to show you the number of homes for sale. This is the inventory, and we are seeing, this is a snapshot in time. So we pulled this on July 1st. And what we see is a 15% increase in active listings compared to last year, which is great. We need even more than that to fulfill the buyer demand that's out there in the market. The total dollar volume of those prices is up 23%. That number being higher than the units available means that they're priced a bit higher than they were this time last year. That's also indicative again down here in the average and median prices. Now, what I find interesting is that the number of homes available on the market is significantly down in everything under 400,000, but that increase that we're seeing in that 15% is coming out of this price range here, barely in the 400s, but when we get to 500 to a million, that's where we're seeing more inventory on the market, especially here at the $700 to $1 million price point. Above and below those ranges, above and below 1 million and 400, below 400 is where we're seeing a decline in inventory quite significantly compared to this time last year. So there's so much here that we could dig into. If you want to see the full report, please go to chisholmgroup.com. If you want to discuss how this affects you and your goals or dig into it deeper, like what does it mean that the feds are raising rates and trying to pull buyers out of the market? Is that happening here? Just give us a call. We would love to have that conversation with you, myself or anyone on the team, 575-377-2321. And until next time, take care.